morning, good afternoon, good evening, and good night. I am 𝐂𝐎𝐍𝐈𝐍, and this is the Crypto and Cognac podcast show, as always powered by our friends at 𝐂𝐎𝐍𝐕𝐄𝐓𝐈𝐎𝐍. And this evening, as always, I will be having some cognac. I'm having some Martell VSOP Blue Swift. Yeah, that's what we're gonna do this evening. What's up, my crypto Caribbean people? It's your boy 𝐂𝐎𝐍𝐈𝐍 checking in for season 4 of the Crypto and Cognac podcast show. This evening, I'm having some Martell Blue Swift. As you all see, I'm trying to finish off these bottles here. My friends at 𝐂𝐎𝐍, they are due to give me a little re-up. But I think they're trying to get me to drink some scotch or maybe some rum. I think that's why they be holding out on me. I mean, I'll try it, but you all know where my preference is. Anyway, good afternoon, good evening, good night, depending on where in the world you are joining me from. Yo, Stevie, what's up, buddy? Cheers to you. Cheers to everyone out there in crypto world, everyone out there in YouTube world, everyone out there in Instagram world, Twitter world, wherever we may rebroadcast, Spotify, Facebook, wherever we be at. Steven, I'm watching you. I feel like you be reading my presentations, you be reading my cliff notes for the podcast. How you know we talking about certain things today that we have to reiterate? That nothing that we share here on a Thursday evening should be misconstrued as financial advice. Do your own research. It's all about the ICE rule. The same way we have our yak is the same way we have our crypto conversations. It's all about information, conversation, and education, never financial advice. Yeah. Today, as we keep buzzing, as we keep being teased with some upswing on the Bitcoin price chart, I wanted to, kind of touch on something, about markets, because everybody's asking, are we in the bull run? Are we still in the bear market? Is the Bitcoin bottom in? Where are we in the Bitcoin cycle? That's the big question, right? So I decided that, today we're going to talk a little bit about the Bitcoin cycle, what makes it different from all the other, market cycles that are out there. And yes, all markets, even though it may not be as visible, all markets have a cycle that we can point to, right? And today I wanted to kind of touch on those various elements, and then specifically as it relates to the Bitcoin cycle. So first and foremost, I want to take a look at the general market cycle, right? And we're talking about the accumulation phase, the markup, the distribution, and the markdown, right? And you all see how that curve goes. And those, except for maybe accumulation, may not seem like sensible talking points for anybody here. So what I wanted to do is kind of look at it more from the perspective of the psychology of a market, right? And that's where we're going to really get into a little bit more detail in terms of how the cycle goes. Right, on the up axis, you'll see price action. On the side axis, you're going to see time, right? And we see that markets, or basically the psychology of the market, and the price movement, the price action of a market is directly tied to the psychology or the emotions that are felt towards the market and how investors are responding based on the way they feel about the market, right? So we're going to start with what would be considered the accumulation phase, where we start with disbelief, right? For most of this year, for much of the latter parts of last year, a lot of people felt that level of disbelief. Well, maybe we should start, let's talk about the back end of the last cycle, right? Starting maybe around the area of euphoria, right? So we can start at the top. We'll start at 69,000, right? Everybody was excited. Everybody thought we was going to 100K, right? And then we saw some things happen in the market. We saw Terra Luna blow up. We saw Celsius blow up. We saw a heavy dip last year coming into June, July. But in August, we saw, with the Ethereum merge, people started becoming a little bit more optimistic. And as we see on the chart here, that led to some complacency. The market started to kind of tick back up. Then we saw, after complacency, we saw anxiety. I guess we could start pointing to hearing news about FTX. People were like, it couldn't be real. What the hell is that? Then came the denial. We saw that more so with people like SBF coming out and saying that, everything is safe. FTX is safe. We could kind of track that with the denial side of the market. And then we saw FTX and the group of companies collapse. And I think there is where the panic really set in. We saw the price move drastically downwards. It really was a situation of panic in the market. And then we got to the point of anger. Everybody was angry with SBF and FTX. Everybody was angry with CZ because they couldn't believe that CZ would cause the whole market to crash by leaving FTX outside. So we saw the anger, we saw the frustration, and then we started moving sideways. We start seeing people moving into depression. The NFT markets that were kind of holding strong for a while, we started seeing them being hit very hard. And we saw a lot of people. Usually Stephen will have a lot of company in the comments. We saw a lot of people move away from the market, move away from the industry, from retail viewers and participants like yourselves, all the way up to VCs, venture capital firms, move away, take heavy losses, redirect their focus to things like AI, robotics, different things like that. And we really were in a space of depression. And then slowly but surely, we went all the way down to 15,000 at one point, and then we started ticking back up. And at every point, people kept saying, you know what, we're going to go back down to 10K. We're going to go back down to 11K. Some people were calling for 8K Bitcoin prices. And I think there's where we started to swing into the disbelief. Yes, we were in the throes of the crypto winter. And even when good things started happening, even when we started hearing talk that there may be approval for a spot Bitcoin ETF in 2023, late 2023, people still were not sure. People felt like the Fed would continue to put pressure on the market. People believe that Operation Choke Point 2.0 and 2.01 and 2.02 would continue to create so much pressure in the market that we wouldn't see any major recovery anytime soon. And I think we continue to kind of live in that disbelief, where we saw some rallies, like I said, up to a couple of days ago, hitting 28,000, having a bit of a pullback now. But I think as we approach the end of the year, as we approach the next Bitcoin halving, we are going to see things moving more and more towards hope, towards optimism. And I think we're going to see more optimism and belief kind of grow in and around the halving. We'll talk more about, my predictions again, not financial advice, for what happens in and around the halving when we talk about the Bitcoin cycle a little bit later. Right? So that was a little, recap of the psychology of a cycle, a market cycle in general, but speaking more along the lines of the crypto and blockchain market. But we talk about the Bitcoin cycle and why is the Bitcoin cycle different from other markets, right? And that's what we want to really focus on for the meat of the podcast today, right? We're going to look at the Bitcoin cycle. By who? It's your boy Dev. Illuminati. Again, not financial advice. The ICE rule remains constant, right? Again, just for those who this might be your first episode, who are new here, who are new to the crypto space, for background, Bitcoin was created by Satoshi Nakamoto, who wrote the Bitcoin white paper in 2008. Satoshi is either a person, a he, she, them, they, or a group, right? It's a pseudonym for the founders, the inventors of the Bitcoin protocol, right? It was created in 2000. It went live in 2009 in response to the global financial crisis. It's basically a peer-to-peer code-based ledger technology, and BTCs, which is small case Bitcoin, which is the token associated with the protocol, have a maximum or total supply of 21 million Bitcoins. There will never be more than 21 million Bitcoins. Why is it so? The code is written that way. The code cannot be changed unless someone gains 51% control of the network. And the more and more we get decentralized, the more and more unlikely it is for that to take place. Now, in talking about the Bitcoin cycle and what causes the Bitcoin cycle, I think we need to focus on three main concepts, right? And those are, one, the Bitcoin blockchain. What is a blockchain? Bitcoin mining and how that impacts the blockchain, and again, the total Bitcoin supply. And I know when we talk Bitcoin and we talk blockchain, a lot of people see, it as being, this flashy thing, like the big chain on that side. When we talk mining, people thinking about, literally fork pickaxes and thing, carving out some Bitcoins. And when we talk supply, everybody want to talk to the moon. Everybody want to talk about the price action. Bitcoin going to be $1 million, $2 million, $5 million, as the case may be. But that's not what we're talking about today, right? Today, we're talking about the blocks. When we talk about blockchain, we're talking about those blocks that are linked together. When we talk about mining, we're talking about that computing power that is used to solve cryptographic hashes, to find the nonce, to then get your block rewards. And when we talk supply, we're talking about that 21 million Bitcoin maximum supply, right? So when we're talking the Bitcoin blockchain, so for those who don't understand what a Bitcoin block is basically just a pooling of data into what is referred to as a block, right? It begins with the block header. Each block is no larger than 1 megabyte. So each block is just a accumulation or grouping together of transaction data, right? And in the Bitcoin blocks, we have both inputs and outputs, because the way a Bitcoin transaction works is it sends, so let's say you have 1 Bitcoin in your wallet and you want to send 0.5, I want to send 0.5 Bitcoin to Stephen. How the block will record that transaction, how the network will record that transaction, is actually me sending the entire Bitcoin to Stephen and him sending me back change of 0.5. So with each transaction in the blockchain, the Bitcoin blockchain, it always has an input and an output, right? Each block, it takes you on average about 10 minutes for each block to be loaded to take up that 1 megabyte worth of data. And we have 210,000 blocks between each halving, right? So when people say that a blockchain halving is once every 4 years, how that is calculated is basically the 210,000 blocks executed every 10 minutes, right, would make up roughly 4 years in our time, right? 2.1 million minutes divided into hours, divided into days, gives us roughly 4 years between each halving event. And that halving event is built into the initial code of the Bitcoin blockchain. Again, it cannot be changed, it cannot be adjusted. Now, when we talk in Bitcoin mining, again, we're talking about proof of work. So Bitcoin is a proof of work blockchain. It uses the proof of work. Wow, brain fart. Yes, the proof of work consensus algorithm, right? So what that basically means is not how much work you're doing in a day when you're at your job. It is computing power to process very, very tough transactions, and each miner that is carrying out this proof of work activity are competing to see who would solve this calculation the fastest, and in so doing they are rewarded. So each computer, each processor on the blockchain, Bitcoin blockchain network, is each 10 minutes is trying to solve or guess the nonce for that particular block. And as soon as they find that nonce, they would then broadcast it to the rest of the network for all the other miners to validate that transaction. So they would also reverse engineer the result that that particular miner got to see if it is correct. Once they arrive at 51% verification of that nonce, then that initial miner who got the answer correct first, they can then post the block to the network, and it is then accepted by the balance of the network, right? And we're talking about accepted by every single computing system that houses the whole Bitcoin network on it, right? And if you don't get to that 51% verification, then that block cannot be posted, right? And again, they are rewarded for doing this work that also helps to secure the network in BTC or in Bitcoin tokens, right? And the rewards for each block posting is a combination of newly minted Bitcoin, right? Which in in the current situation, for each block, you are rewarded 6.25 Bitcoin. So they would get that newly minted 6.25 Bitcoin in addition to a share of the transaction fees that would have been paid for posting transactions on the blockchain. Yeah. Yes, sir, Stephen. So Bitcoin uses the SHA-256 hashing algorithm to solve its complex questions, right? So yes, like Stephen say, validating a block on chain network and getting paid in Bitcoin, right? Now, in addition to that, we're talking about the maximum supply, so the 21 million, and that is, I think that is a very, very important part of the whole value proposition of Bitcoin. Now, Satoshi person or group, they would have designed Bitcoin along the similar principles or to have some of the similar characteristics of gold. And that's why, for example, in discovering newly minted Bitcoin, the process is called mining, right? And part of the model that makes Bitcoin like gold is the idea of a limited supply. And actually Bitcoin, because it has a finite number of Bitcoin, is actually a little bit more scarce than even gold, because even though gold will become more and more difficult to mine, I don't think that we are going to be able to use up every single or mine every single piece of gold on earth, right? There will come a point where it just becomes too expensive to even go after that gold. But the supply will be there as compared to Bitcoin, where when we get to that last Bitcoin mined, we will be done. There will be no more Bitcoin. And at that point, the miners will only be able to benefit from the transaction fees on that network, right? And this is, like I said before, is all programmed into the protocol, and it's done as a means of reducing the distribution over time, creating a stable inflation rate. So, for example, based on the current distribution of Bitcoin, which is 6.25 Bitcoin per block, I think about 900 Bitcoin are produced per day, which gives an inflation rate of about 1.8%, which is way, way lower than most of the fiat currencies out there, including the US dollar, right? So yes, a stable inflation rate. As of 2023, as of today, a little over 19 million Bitcoin have been mined, which means that a little less than 2 million Bitcoins are left to be mined. However, because each 4 years there is the halving process and it becomes more and more difficult to mine Bitcoin tokens, we at the current rate will get to that last Bitcoin being mined in the year 2140. So unless we have an amazing run against Father Time, most of us alive today will not be around to see that final Bitcoin be mined. But hopefully one of our descendants, one of our kids will be around. They might be that lucky person to mine or to receive that very last Bitcoin, which is expected to happen in the year 2140, right? If my maths is right, a little over 117 years from now. Okay. Now, just for some some context here. I just wanted to show what the distribution of Bitcoin or Bitcoin rewards has been since the creation of the protocol all the way to today. So in 2009, when the protocol was launched, the mining rewards for mining a block was 50 Bitcoins, right? So that's why the people who were around since back in the day, the people who believed very early, the people who understood very early, that is why a lot of them are very wealthy today, because they were being rewarded 50 Bitcoin per halving, per block posted, right? In 2012, which was the first halving, that would have dropped down to 25 Bitcoin for each block. In 2016, that would have further been reduced to 12.5 BTCs per block. And then in 2020, the last halving would have taken us down to 6.25 BTC per block. And that is where we currently are. In the halving that is due in early 2024, around May 2024, will take the block rewards per block down to 3.125 Bitcoin per block. So you see, every single halving, it becomes more and more scarce in terms of the number of Bitcoins that are brought into the market that are available for consumption. So if we think about it just from a logical perspective, right? If demand remains the same, but supply is reduced, then you can expect that the price to be impacted positively. And that is why the Bitcoin cycle, or the Bitcoin market cycle, is so closely tied to the halving, right? Because again, as long as demand remains the same or even goes up and the supply decreases, then obviously price will be impacted in a positive way, right? Now, we can look back to the historical data to show that. Now, typically, the halving does not immediately translate into that increased price action. But what we've seen historically is that within 12 to 18 months of the halving, we see Bitcoin achieving new all-time highs. So at the time of the first halving, one Bitcoin in 2012 was $11. In 2013, that achieved an all-time high of as high as $1,100, right? In 2016, there was a pullback. By that time, Bitcoin at the time of the halving was $600 in 2016, and we saw that within 12 to 18 months, this was closer to 18 months, more towards the end of 2017, we saw that price spike all the way up from $600 at the time of the halving to $20,000, right? At the peak of that particular bull run, right? We saw significant pullback again. COVID happened, and then at the time of the halving in 2020, Bitcoin was priced at $8,000 for one, right? And we saw that by 2021, I think by the end of 2021, maybe around November 2021 is when we achieved, or early December is when we achieved the new all-time high of $69,000, right? So what does that mean? I mean, we've since seen us pull all the way back to 15,000. We're we've kind of been going sideways for a while between 25,000 and where we are at now, 27, 28,000. Where will we be at the halving in May next year? It's left to be seen. Are we going to be lower than we are today? Are we going to be higher than we are today? Are we going to see? And this is where I think a lot of things have to be taken into consideration in terms of what happens in and around the halving. Of course, we are seeing an amazing amount of mainstream adoption. Again, we've heard talk about a spot ETF that is going to make access to Bitcoin a lot easier for accredited investors, institutional investors. Of course, we are not seeing any slowdown in terms of the mass money printing across all economies, whether it's in the US, whether it's in Europe, as governments try to, cope with inflation. We have the US presidential election looming large next year, 2024. Again, we have new technology adoption. AI is running rampant. Robotics. How is that going to impact Bitcoin and blockchain? We are seeing BRICS adoption. We are seeing more and more countries moving into the BRICS alliance. I think as of today or yesterday, we saw Brazil and China transact their first set of business that did not require the use of US dollars. So they are transacting in their own currencies. That and many other things are going to be threats to the strength of the US dollar. The performance of Bitcoin has been tied very, very closely to the strength of the US dollar. How does that impact the price? And how does this threat to the US dollar impact global peace? You know what I mean? We've seen history has shown us that empires, when failing, tend to fight for their lives, and we don't know what the fallout from that could possibly look like. So I think all these things are going to play a major part in where we see the price action associated with Bitcoin, in addition to the halving, which is coming up around May 2024. So, me personally, what do I think? I think we're going to see a lot of excitement leading up to the halving as more and more people hear about how this halving is supposed to impact the market. I think we're going to see a significant run up as people anticipate the halving, as people try to get in and accumulate BTC and crypto at lower prices before the halving. And then when the halving doesn't prove to be this magic pill, I think we're going to see a pullback. They say, buy the rumors, sell the news. So I think we're going to see a pullback. But all in all, I think we are going to see new all-time highs in the next bull run, which obviously will be kicked off by the next halving. I think the supply and demand side economics, it can't be prevented. It can't be prevented because it's just the numbers don't lie. They say men lie, women lie, numbers don't. Right? So Steven believes that we're gonna see some 47K soon. Thanks, bro. We gotta keep merged up. Crypto Caribbean merged up. Crypto Caribbean merged up soon to a store near you. Of course, we're gonna be making them available to be purchased with crypto. But guys, that is it for me for this evening and our discussions around the Bitcoin market cycle. Of course, we know the halving that is coming up next year is going to play a major part in kickstarting that cycle. But as we say, always do your own research, do your own risk assessment. Your situation isn't my situation, isn't your friend's situation, isn't your mom's situation. So yes, allow people to introduce you, but always do your own research based on your particular situation, because everybody's situation is different, everybody's risk tolerance is different, everybody's time horizon is different. So do just run in and say, I'll say, Stephen say, although we will never say, right? And as always, like, share, subscribe, support the podcast. Now is the time to share, to get your people involved. I know a lot of people gonna be coming running when we get past 69,000, when we go to 70,000, 78,000, 100,000. Everybody gonna be flooding in. Everybody want to hear about crypto. Everybody want to hear about Bitcoin at that point in time. Everybody, it seems so easy when we talk about buy low, sell high. The concept just seems so easy, but it seems so hard for everybody to do, because when it's low, everybody's afraid, nobody wants to get involved. When it's raging, like we looked at the market cycle, the psychology of a market, when it's raging is when everybody want to get involved. So guys, control your emotions with this trading thing. Make a plan, get the information now, make a plan, stick to the plan. Even when things getting hot and heavy, stick to the plan. And look at what the market is doing. When everybody is scared, that might be the time to be brave. When everybody feeling brave, that might be the time to hold a corner, right? So, and as Stephen say, sometimes time in the market beats timing the market every day of the week. So if you're not a professional trader, just dollar cost averaging $100 every single day on this particular day of the month. Every single thing, whether the price is $1 million, whether the price is $1, you just keep dollar cost averaging in. That has proven to be a very, very successful strategy for a lot of people. And then if you can, hold on, right? Guys, as always, I appreciate you being here with me, sharing some information with me. Stephen, as always, thank you for being with me, sharing in the comments. Guys, I've been saying it for 2-3 years now. I don't even know at this point. Adoption is inevitable, right? Adoption is inevitable. Adoption is inevitable. Do not be left behind. Seek the information. The information is free. The Crypto and Cognac podcast show is free. Send it to your friends. Get the information. Don't run out and buy no course and spend no set of money. The information is free. When you have the information and you feel confident about the information and you feel confident that you know what you're going to do, then small amounts. Don't invest more than you can afford to lose, because that will shake it to your core, right? As always, guys, be blessed. Steve-O, love in the house, buddy. Guys, Illuminati out. Be blessed.